If we go by the saying money never sleeps, this month really has been a big one for investors. Markets were initially buoyed by the Biden victory and then rocked forward by news of a COVID vaccine from Pfizer. And our portfolios have been enjoying this ride. There will be some people who will breathe a sigh of relief with Trump out of the White House, especially China. Investors have seen Asian shares outperform as a result. And our balanced portfolio has a 4% exposure to Asian shares via the Fidelity Asia Fund. And this chart is showing the strong outperformance against our global equity benchmark over the last month. A Biden government should mean higher spending and higher taxes. But implementing this policy is going to be difficult because it does not look like the Democrats will have control of the Senate, which is shown in this chart. The final Senate majority won't be decided until the new year, but so far it is the Republicans who are just ahead by 49 to 48 seats, with 3 still to be decided. In some ways this is good news for investors because the risk of an increased company tax rate has now fallen. COVID vaccine news from Pfizer is also a game changer. The vaccine trialled 44,000 patients and worked in 90% of cases with no reported negative side effects. This is much better than what the market has been hoping for. And the key investment implications are in this chart, where I am showing the divergence in performance between growth and value stocks since 2014. In blue, I have growth stocks. These are the large tech names which have been well suited to the COVID world and have massively outperformed. The sad looking pink line is the performance of value style stocks, which are things like banks, dividend stocks and energy stocks. If COVID vaccines prove to be effective, we are likely to see a strong economic rebound, and the value stocks are far more sensitive to this recovery. So, with light at the end of the COVID tunnel, we are now expecting a changeover of market leadership, essentially some level of reversal to what has been observed over the last 6 months. We have an overweight to energy stocks in our balanced portfolio via Woodside. We also maintain an underweight to growth style stocks via an underweight to US shares. Our overall view is that markets will trend sideways from here, albeit with spouts of volatility, as is always the case. And that's something we can talk about more in a future video update.